Hello, 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 everybody. It is December 31st, 2024, the last day of the year. And this is our last Southern California housing market update. I'm not going to make you wait all the way through. We're going to go ahead. I'm going to deliver you three predictions for 2025. I'm not going to make you wait until the end, but let's go ahead and get started. My name is Stephen Meade with Domicile real estate for people who love houses. This is our whole housing market update, but the reality is we're going to talk about 2025 and we're going to talk about three predictions that I'm going to make. And those three predictions are in the areas of interest rates, prices, and inventory. And when you think about it, in a lot of ways, these are really the variables that are interrelated to one another. And if you kind of play around with some of your modeling and expectations on those, you really can determine the other two variables. And I'm going to bring up a chart really quickly here just to kind of give you very, very briefly, just to kind of graphically explain this, which I think one of our charts does that really well. This is our sort of affordability index, right? And we've got really CPI, we've got a rent index in the yellow line, we've got a payment index in the blue line. And that payment index is based on the median home price as well as prevailing interest rates. But what happens is, these variables really do relate to one another, right? Because we talk about renters and buyers as if they are completely different people. And while sometimes that is true, where the sort of all the action happens in this market are the people that are trying to make a decision between renting or buying or deciding when they are going to buy. Also, what's affected by this is people deciding if they're going to rent their home out or not. You'll notice that rental index has dropped a little bit, but we kind of tend to see a lot of funky things happen towards the end of the year. So I think that might be a little bit of an anomaly. Anyhow, so back to our three predictions. Let's start off with interest rates, right? Interest rates generally have a big effect on demand, especially for homes below, in our LA and Orange County markets, probably anything below 1.3, $1.4 million. Interest rates are going to have a pretty big effect on those things. So they're going to affect that demand, right? And that's going to really sort of affect where the prices are going. So my expectation on interest rates is I think if you're hoping that 2025 is going to be your year to kind of get back really into the fives, I don't know if it's going to happen. I think we will be lucky to hit high 5% next year in 2025 on prevailing 30-year fixed rate mortgages. And the reason being is I just don't think there's going to be a need for the bond market to really sort of there's not going to be a need for the incentive on mortgages. I think the economy is going to do pretty well next year from a GDP growth standpoint. The Fed's not really going to be in the mood to drop rates. That's going to make, when the economy does well, ironically, that's pressure on inflation because it increases spending. I just don't see the Fed in a hurry to drop their overnight lending rate. I don't see the bond market in a hurry to think we're going to have some period of ultra low inflation just around the corner. So I think we are going to see some reductions versus today, but they're not going to be as big or as quick as people want. So that's prediction number one, interest rates. I think we're going to be lucky to hit the high 5%. Now let's talk about prices, right? Because prices are probably the big one that everybody thinks about when they're saying, I want to predict the real estate market for 2025. My prediction on prices, at least again in the Los Angeles and Orange County markets, I've got some thoughts about some other markets in California that I have maybe a differing opinion on, but I think our market here, we're going to be looking at something, I want to say something in the mid-single digits for appreciation next year. Now, I always give this word of caution to everybody. If I say prices are going to go up 6%, which would be in the mid-single digits, right? That would fit with my prediction. That does not mean they're going to go up 0.5% every month in 2025. The reality is they probably will stay pretty flat until we hit that kind of spring bounce of demand. They will run up and get most of their gains, really usually in a 2 or 3 month stint in the spring. That tends to be the way our market works. So it's a very uneven process of getting that 6% by the end of the year. It's not always linear. Sometimes there's rises and then little falls. Um, it's one of those things you have to kind of really take maybe a step back and look at it. And kind of that's the overall market trend. So if you're somebody sitting on the sideline and you're thinking, well, I really hope interest rates are going to go down next year. I think they are going to go down a little bit. I do think prices are going to go up. What I don't see happening is sort of a blockbuster 10% plus year. And there's a couple of reasons for that. Number one, our rental market has been pretty flat in 2024. If you remember from that graph back there, one of the things that happens is as that spread between the price to own and the price to rent widens, fewer people make that jump, right? That's a pretty reasonable expectation. So I think unless we really start to see some rental gains happening again, I don't think there's enough heat to fuel us for an increase in prices that would be into that double digit 10% plus range for next year. So where are we on prices? Somewhere in the mid single digits, probably. My window is probably between 3 and 8% is where I think we're going to end up falling, somewhere in there. I think that's a pretty reasonable expectation to fall within that range. I don't think we're going to see prices really fall by the end of next year. I think we are going to be up versus this year, but I don't think we're going to be up by some huge, crazy number. I don't see the conditions exactly being right for that. Of course, there's a number of things that could happen that could change that. But as of right now, I just don't see that. I think we're looking, again, kind of in that 3 to 8% window. Okay, final prediction that we're going to make for 2025, and that is about inventory levels. And really, this is the other thing that I think people forget about that really has an effect on the market. And these variables are all interrelated, right? Because what happens when inventory is very low, it means you don't have to have that much demand for prices to go up, right? Because prices go up, even if you only have, say, 5 people who are looking for homes. If there's only one home for sale, they're going to be bidding on it, right? And the price of that one home is going to go up. So you have to understand that those things are relative. So inventory really represents that sort of supply side of things. I don't see a huge jump in supply. I think we're going to have a higher transaction volume in 2025, probably maybe in these, like I said, Los Angeles and Orange counties, maybe up 10%. That's still a very tame year. And I think that's really going to be where the fuel for some of those price increases come. That and combined with a growing GDP, I think that's going to help with some wages a little bit. And we're going to see that's where the energy comes from those prices to go up by those mid-single digits. But I just don't see us having a huge buildup of inventory. And I also don't see us necessarily going back to the period of like 2021 or so. I don't think there's going to be enough strong demand to push that. And if there were, we would start to see those double-digit price increases, right? Because that would really put people in there. Now, one of the reasons I don't see a big swell in inventory and a big swell in transaction volume next year is because those interest rates won't be lowering by a huge amount. We still have a lot of owners who are in the market at very low interest rates, right? So that move up is a little bit harder. It's going to be a little bit easier than it was this year, but we're still talking about people trading one interest rate for another. The other thing that I see happening is really affecting this is that single family rental market is pretty tight. We're just not seeing a lot of homes turning over. We're not seeing a lot coming up, yet there is demand for people who want to rent these single family homes. Because of that, because of the ease of finding qualified renters, that also is going to put a damper on just how many of those sellers decide to put those rentals up for sale and convert them back. I mean, we have a lot of inventory in our market where, it might be somebody who moved to another state, but they kept the home here and rented it out, largely because of their interest rate, but they're going to keep renting it out because they have a steady supply of great tenants at relatively high rents. And I think as long as that continues, that's going to keep a lot of those homes from ever hitting the market as for sale inventory. So just to recap, those are my 3 predictions for 2025. Interest rates, I think we're going to see them eventually maybe get to the high 5s. I don't think we're going to see the mid or the low 5s next year. I just don't. Price growth, I think we're going to see prices go up somewhere in that 3 to 8% window as sort of a year over year figure, like when we take a look back at the end of next year. And then finally on our inventory levels, I think it's going to be a little bit better. I don't think it's going to be that much better. And I don't think transaction volumes are going to spike more than 10% or so. Those are just my predictions. Now we're going to go ahead and kind of run through some of our recent stats here. So let me grab those and pull those up for you. I'm going to go pretty quickly because we spent a lot of time on our predictions this year. But let me see here. So if we look at our active listings, obviously inventory is taking a nosedive. This is pretty common at the end of the year because people don't put their homes on the market, but buyers are still out there. What does that do? It reduces inventory. We look at our new listings, right, in the last 2 weeks. This really kind of says it all. I mean, we are pretty close to the level we were at last year, meaning not very much. And if we look at our new escrows, again, it's the same story. Things are a little bit better this year in terms of a little bit more transaction volume, especially in that 1 to 2 million category, but really about the same in that under 1 million. Our absorption rate is through the roof. That is expected, but it's not really a market indication at this point because there is that disconnect between buyers and sellers, right? Buyers still looking at houses that they want to buy. Sellers don't want to move around the holidays. So don't want people traipsing through their home, Christmas decor, etc. That just tends to be that disconnect between buyers and sellers. We look at our closed prices. Again, this is taking a look in the rearview mirror. I think this one's kind of interesting. It looks like that middle is really where things have been eating it the most, and we've seen some softness in prices. But again, if you look at this, everybody is up year over year by at least a little bit. So this was not a flat year, right? Everybody saw some price gains in all sort of the 25th percentile, the median, and the 75th percentile. So across all price ranges, we saw some price increases. If we look at our percent still on the market, as this number goes down, right, like that tends to indicate a more competitive market. Is it a little bit more competitive than it was in the fall? Yes. Is it as competitive as it was early in the spring of this year? No, it's not. And that basically makes sense with kind of our anecdotal experiences out there in the market. We look at our list to close ratio. I think this one really signifies that we are finally back to getting to a point of normalcy. And normalcy is that homes sell for a little bit under their list price, right? Or close to their list price. For a while, we were really sustaining that 1, 2, 3% on average over that list price. I think we're finally kind of seeing a return to normalcy. What does normalcy really mean when we look at this graph? It means that buyers and sellers both have a reasonable and similar view of where the property should be priced. That's what it means. It means they are in agreement, right? When you're selling for over list, it means buyers think it's worth more than sellers do. If you're selling under list, it means sellers think their property is worth more than buyers do. We look at our days on market for new contracts. That's definitely really going up, but it's not exactly atypical for this time of the year. We see that towards the end of the year, those numbers do go up. What will be very interesting is to see is what happens when we hit January. How soon do they start coming back up, coming back down? That's going to tell us a lot about what kind of spring we're going to have. And then obviously we've got our three-way chart here. And, as you can see, it's that gap, right? We tend to notice there's about 2 sections of the graph or less. Between 1 and 2 in general is where our market likes to sit. That's sort of its happy place. When you get a wider than 2-unit disparity between that rent index and that payment index, that's really where things kind of start to happening. And then if they come together, that gives you room for some price increases. Like I said, if those interest rates come down, that's going to make that blue line come down a little bit, and it'll, of course, leave a little bit of room. I do think we're seeing an anomaly there on that yellow line with the rent index. Part of it's because we just don't have a lot of great data at the end of the year because there's not a lot of rentals changing hands. Finally, we've got our prevailing mortgage rates. They're really just kind of hovering under that 7% level. Like I said, my prediction is we are going to be moving down through the 6s. I really think maybe we'll hit the high 5s. Not really seeing a whole lot on that range. So that's pretty much all I've got for you in 2024. Our 3 predictions for what's going to happen in the market in 2025, our market update. Obviously, everybody have a safe New Year's Eve and a happy New Year, and we will see you again real soon.